I must admit the market is not doing a lot lately. All right, and we're getting, it looks like we've got some tighter ranges. The market's not breaking out. Well, it breaks out of the range, comes back in again, goes back into a range bound, or it breaks out of the range and goes back into another range. Man, I don't know. There is going to be a turn. Now, we've got a full moon coming up on the 20th of July, which tends to change the trend a little bit. Hopefully, that's going to be the case. We'll talk about this right after this. Alrighty, good morning traders and happy Friday, or should I say happy preachy Friday. Alright, I'm just kidding, I'm not going to mess around with you today. Traders, yeah, the market seems to be a little bit not on a path of trend, but path of consolidation. It seems like we had a lot of news out this week that could have pushed and drove the market in direction. We didn't quite see that. We had the Canadian news coming out, nothing happened. We had the European news coming out, nothing happened. So we're getting spikes here and there, but we're not really seeing a nice breakout. Now, listen here. If we see a nice little short-term rally, which is a daily rally in a pair, it doesn't necessarily mean the market's on a trend. It just means that it may be trading between the support and resistance level of consolidation. What we'd like to see is the market start to break out of these consolidation levels and then stay inside the trend. It's not happening. Listen, I understand. If you say, well, big dog, it's summer. All right, this is summer trading. We're gonna get a lot of this. You're right, we are. So which means that we need to be proactive and start making sure that we're trading in what we call a gear down trading approach. What is that? Well, you'll have to check out the videos that I've posted on gear down or gear up, gear down trading approaches. Check out that video and you'll know exactly what I'm talking about. The videos are inside my YouTube channel. Just check it out. Now, what we're going to go ahead and do is take a look and see what happened this week based on the trades that we were looking at. And I'll be honest with you, we had 3 opportunities right here. Let's go ahead and take a look at the chart. So we had 3 trading opportunities this week. And those 3 trading opportunities was the Euro CAD, the Pound US Dollar, and the Aussie CAD. Now, all 3 of them were set up as a low probability this week. All right? Low probability. So that does create an issue around whether or not we're going to get this thing fire off and actually make money on this trade. Let's go ahead and take a look and see how the market's set up this week. Let's start with the Euro CAD. Now, before I get started, good morning. We've got a bunch of traders right here. We've got William, good morning. Sham, Denise, good morning. We got Karen in the house. David, good morning, David. We got Jack, Carol, Abraham, and Abraham says, I've been scalping. Abraham, you're right on the money right there. That may just be the way to go. And what we've done inside the trading room, and if you're not part of our trading room, check out the description. You can get in the trading room by clicking on the link below in the description. Now, in the trading room, we're now looking at an opportunity to go ahead and trade scalping opportunities in the US trading session. As the European trading session closes out, we're looking to scalp the market. There's a specific rule of thumb when we go ahead and look for scalp opportunities, what we need to have in place in order to be able to find a scalp. So we're going to be doing that in the trading room. Also, another thing that I think is important that I bring up as well is that the morning Forex session may be shifted around because I'm extending my trading room from Monday through to Friday instead of just Tuesday, Wednesday, and Thursday. When that takes place, I'll let you know when that happens. But this is the deal. If we go ahead and take a look at the Aussie CAD. Aussie CAD, we had at the start of the week, we had a low probability trade. You can see price actually went ahead and hit that target. So Aussie CAD, oh, hang on, my bad. Not Aussie CAD, Euro CAD. What am I doing here? Oh man, I need a weekend. All right, here we go. Here's the Euro CAD. So the Euro CAD actually, in fact, set up. We actually got in on a trade. So woo, trading opportunity, baby. All right, so we got. Looks like we got in, but we never hit our target. But here it is, right here. We got in at this level right here. Looks like the first entry point came off the close of this candle right here, and that would have been at 54.67. All right, so 54.67, we're in. All right, so 54.67, we're in. We're actually selling this one right here. So this is not a bearish alert anymore. We're now active on a overbought condition. All right, so we're in EuroCAD. Now, fantastic. We're in on the trade, but man, there's nothing going on right now. Let's go ahead and put that entry point in. 54. It was at the close of that candle right about there. Let me just make sure I got the right number. Yep, 54.67. There we go. So 54.67 right here. That's the entry point. That's where we went ahead and started selling. All right, so we've got a trade in on the EuroCAD right here. Price has moved up a little higher. Let's take a look here. We moved up around about 71 pips, which means that we do not have an additional entry point in. We had a total high of 77 pips, so no new trade on this. We're in on one trade. We did see a little bit of money on this trade when the market moved back down to this level. You can see that it touched a liquidation level right here, and that was about 75 pips. We still had approximately another 70 pips to go before it hit that target. We did not hit the target. We're now seeing price moving up a little higher. So we got one entry point in, so we got something on this trade this week, all right? But we haven't got any payout. No payout on this yet. Let's go ahead and take a look at the next currency pair right here, and that is the pound US dollar. So pound US dollar, oh, by the way, before I go ahead and I want to take a look at any other targets price may be chasing after. All right, good, no. All right, so that's it. That's where we're at. So this is where we're at with regards to the euro. Let's make it active right here. And let's go ahead and take a look now at the next currency pair, which is pound US dollar. I believe that is the one. Let me make sure because I'm getting this wrong today. All right, there it is. Pound US dollar. Pound US dollar, we have a target that price got to before we actually had a trading opportunity. So no trading opportunity on this one at all this week. This is going to be a no trade right here. It was a low probability, so we got that one right. We did hit the target, so we can call that a hit target right here. And let's move on to the Aussie CAD. Oh yeah, we did have the Aussie CAD. Are you kidding me? I was right. All right, Aussie CAD. I jumped the gun a little bit, but Aussie CAD is a pair we focus on. All right, here we go. Aussie CAD. Let's take a look at Aussie CAD right here. We did hit the target without price getting into an overbought condition before getting in on this. So this was a hit target and no trade. All right. So out of this week, we only got one trade in, no payout this week. All right. All right. Now, John says on the pound US dollar, I made 39 pips last night on the buy. Well, John, that may be a different trading strategy that we follow here in the trading room. All right. That's a different trading strategy. Here in the trading strategy, here in this trading room right here, or in these sessions that I hold, we trade on a specific rule set. All right. Now, what type of rule set is it? What type of trading style is this? Well, it's very simple. There is trend-based systems, there are position-based systems, and there are what we call counter trading systems. This system right here, target trading, is actually, in fact, a counter trading strategy that trades against the overall trend. Now, how do we determine what the overall trend is? Well, these pivot points act as support and resistance in the market. As price goes up, pivot points are going to be placed at the bottom of that trend. If the market is selling off, the pivot points are then placed at the top of the trend, which means very quickly we can identify whether the market's in an uptrend or downtrend or even moving sideways. How do we know if it moves sideways? Well, these pivot points will be inside the consolidation level. We can identify that price is moving sideways, especially when you see pivot points close to each other. You know that the market is moving sideways. Now, The reason why this is a counter trading strategy is because as price moves away from these pivot points, we're trading back to those pivot points. So think about it. If the trend is up because we're trading above the pivot points, but we're trading down towards the pivot points, it is then considered to be a counter trading strategy. Now, don't get me wrong. Many a time we get in on trades, and what happens is the target that we're chasing after is a short-term target, which means that the overall trend may be bearish. All right, overall trend may be bearish, and although we're trading towards these short-term targets, it may end up being a long-term direction. Does it make it clear? Is it clear, or do I need to explain a little bit more? Well, let's go ahead and take a look right here. Okay, let me explain myself in a little more graphic form right here. So this is the deal, and I think it's important for those that are new to this session to understand exactly what it is that we're looking at right here. So as the market, and maybe I should bring an example up on, yeah, I'll do one just now. All right, so this is the deal. When the market is trending, you'll find these pivot points below the market, all right, as support. Now, this could be just a short-term correction because what's happening is there was a long-term bearish sell-off down here, and this that you're seeing right now is just a correction move. So what's going to happen is, and in most cases, if you look at a weekly or a yearly target, you may have a yearly target or weekly target up. Something more of a yearly target and a monthly target. So you have a monthly or yearly target slightly higher. And what's happening is these weekly targets that we're chasing after are supporting the market towards a monthly or yearly target. All right. Now, when price goes up and then starts going down, and we started trading towards, let's say, this target right here, and we started selling. Can you see that we traded against the trend, at least the short-term trend, right? We're trading against the short-term trend. And as price eventually starts going south, now we're in the direction of the overall trend, although we were counter trading at the start of the trend. And so that becomes now more a long-term position. All we did was add it to our position as price goes ahead and moves back in a retracement move in a downward channel. All right, so that's pretty much what it looks like in a graphic form. Now I'm going to go ahead and show you what it looks like on the chart, so you got a better understanding what it looks like on the chart. So let's go ahead and check this out. And by the way, it is Preachy Friday. All right, so I get to do this stuff. So let's go ahead and take a look right here. Here's a chart. If I go ahead and compress the chart up right here, this may not be the perfect example, but I'm going to go ahead and show you what it looks like. All right, if you notice right here, notice that we have, right here, we have pivot points, all right, these targets below the market, all right, which is supporting this upward trend. Notice how when you get these pivot points close to each other right here, notice how the market moves sideways, right, when the pivot points are close. Then when the market breaks out, we start seeing pivot points supporting again the level. All right, it supports again. And then here we go sideways again. And what happens? We get these pivot points almost like clustering up together in the virtually same location. So that is what we're seeing right here when we have the market supported by these pivot points. Check this out. Here you can see from a glance, all right, from a glance, you can see very easy that we have pivot points ranging together right here, creating this consolidation in this move. And as we're starting to see the market breaking up a little bit, here you can see there's a pivot point right here, here's another pivot point. We're starting to see a little bit of an uptrend. Now, I'll be honest with you, I'm actually expecting the Aussie crosses to be selling off. So if I expect the Aussie crosses to be selling off, then what I should be looking for is for the market to go ahead and break and trade below the pivot point so we can start seeing some downward trend. And if you want to really go ahead and see an early turnaround, you may want to check out the dailies, because if the dailies start heading south, if we start seeing, or at least if the dailies start showing the the targets above the market, then that means that we may end up seeing a bearish channel or a bearish trend start to take place on this particular pair. So that's pretty much what it is. That's pretty much in a nutshell exactly what we do here with this target trading strategy. Now, very, very, very important, all right? How do we know what's going on with the overall market trend? Well, traders, I always look at currency pairs that I'm currently in right now. I always look at the larger or the bigger picture, right? Take the bigger picture and then establish whether or not you're in a trend that is a overall trend rather than a short-term trend. So this is what I do, okay? I go to a daily time frame. When I get in, and let's say, for instance, let's say if I go to, let's open up this again right here. Let's say I was selling on the Aussie CAD. If I was selling on the Aussie CAD, let's say this target right here, which by the way, I'm almost certain this is what I'm chasing after, but let's say I was selling and I had added multiple positions in as price went higher, and I'm selling towards what was this target initially, right? If I'm selling towards that target, then what happens is when the market sets up these entry points, I normally go ahead and look if I'm in with more than 4 positions in. If I've added more than 4 positions in on those, what I tend to do is I tend to go ahead and look at the larger time frame. All right, I go ahead and look at the larger time frame. And what I'm doing on the larger time frame, I'm trying to establish what the overall directional bias may be, or what I could see as a possible correction move. Now, right here, if I'm selling Aussie CAD, which, by the way, I am selling Aussie CAD, then I'll be looking at this larger time frame, and I'll be establishing whether or not and when I should be expecting some downside move. Because I am looking for price to go ahead and correct itself. I'm looking for a weaker Aussie, but the question is, what technical move can I anticipate based on what I'm seeing on the daily? So if I go to the daily again and I open up over here, I'm looking at the wave structure. I'm seeing wave 1, 2. Oh, by the way, yes, I am getting a little more technical, right? All right, a little more advanced technical analysis being placed here. So if I go ahead and look at this right here, I've got wave 1, 2, 3, 4, and 5. Price is showing a bit of divergence here. Lovely divergence here at the top. So I'm expecting Aussie CAD start falling very, very soon. In fact, imminent that we may see the Aussie CAD starting to fall to the downside. All right, to sell off. Now, what level is very important? 94.32. Notice how market traded above this. So this was a contraction phase right here. All right. The market is contracting here. Here it is. It's contracting. Now it's broken out. So we may be heading into what we like to call an expansion move, which, by the way, expansion moves are seen in patterns as well. You can see it if you take a broadening formation right here. Then what normally happens is price goes into contraction, then goes into expansion. You see how you can get an expansion move with a broadening formation. And then we go into trend. All right? So we can go into contraction, expansion, and then into trend. So I see this, when I see divergence right here, it's very possible that this is now starting to move into expansion phase. And we should start seeing price hit the top and then head back down south right here to support. All right. So this is why I'm still comfortable holding onto Aussie CAD short, because I believe price is going to eventually move back down to another support level to the downside. Now, Carol says here, and look at the US dollar. All right. All right. Let's go to the US dollar right here. And US dollar right here. All right, I'm on the US dollar right here. What is it that you need me to see, Carol? Here. So do you use pending orders on the way up so that you potentially get fired on the way down? Oh, good. Carol, good question. So Carol says here, do we use Do we use pending orders? Well, there's a couple of ways you can trade this, right? Number one, you can trade it using manual trading entry points, which would be pending orders, because you're not going to be around in the middle of the night or early mornings to go ahead and place trades in, right? So you want to make sure that you get in on these trades as price moves to these different levels. So yes, pending orders would absolutely be something you can use as a manual trader. There would be some semi-manual trading, which you can use semi-automation, or you can go into what we call full automation. Woo! Full automation means that you've got everything worked out for you inside a system. All the logic's been put in there that it does everything that you want to do manually. It does it automatically. How do you get that? How do you do that? How do you get all this done? Well, if you check out in the description, there's a link in the description called Target Trading. Check it out. You can get the automation, the EA, all the good stuff, all the training on that in order to be able to trade just like I do, where I use automation to place these trades and to manage the trades manually. All right. So I use automation to get me into the trade and help me manage my position, but I'm still the overall manager, the one that overlooks the account, that manages the positions in case I want to get out of the trade a little bit earlier. And that's always important. You always need to be in control of how you trade. Absolutely need to be in control of how you trade, especially when it comes to making decisions whether to hold on to a position or get the heck out of Dodge. All right. So now I'm still not sure exactly what it is that I need to look at here on the US dollar, Carol. But here I am. Now, I guess I'm going to break it down while I'm on this chart. So, dollar index right now is, in my opinion, still bullish. Regardless that we have broken below this trend line, I'm still seeing this as a bullish setup and looking for price to move to the top. This may be, this bit of break over here that I'm seeing here, just may be what we call an adjustment to a trend, which means it's going to go back up once it takes out the highs. All we're going to do is adjust our trend line to that low. All right. So this could be what we call an adjusted trend line. Wait a minute. Maybe let me see here. I can already start this adjustment. Let me just go ahead and mark it off here down at the lows. And that's actually the adjusted move right here. There we go. Yeah. So I've already adjusted it to this low right here. And that's pretty much what it is. So we may have an adjusted low right here. And actually, now that I put it over here, you can see it's still supporting this level. So I am expecting a bullish move in the dollar index. Now, why am I so focused on the dollar index? Right? Why am I focused on the dollar index? All right. And Craig says, good morning with a cup of coffee. Good morning, Craig. So why am I focusing on the dollar index? Well, the dollar index is a good leading indicator as to what's going on with quite a few other pairs. Now, what do I mean by that? Well, firstly, number one, when I see dollar index rally, stock market's going to start falling. If I see the stock market rally, then I'm seeing the dollar index start to fall. And then what does that mean? Well, it means that when stock market rallies, that means investors are moving into more risk appetite. When we see the stock market falling, that means we're going to see dollar index starting to rally, which means that investors are moving into cash, all right, out of stocks into cash. And if that's the case, then we're going to start seeing more of an increase in value in the what we call the risk-off currencies, which is safe haven currencies like the Swiss, even the euro, the US dollar, and the JPY. Those four will start gaining ground against the other major currency pairs. That's why the dollar index, to me, really gives us the tipping point whether or not we're going to start seeing either a safe haven upside swing or a safe haven downside swing in those currencies. That's why the dollar index, to me, is a great chart to take a look at when you want to try and establish what's going on with the other charts. Well, if we go ahead and take a look at the dollar index at the moment right now, what is it telling us right now? Well, it's telling me that we may start seeing some upside move in the dollar. That means that we're going to start seeing some rally in the Swiss, and we'll start seeing some rally in the JPY. Now, I want to go ahead and say this too. It doesn't mean because we are going to see a strong move in those safe haven currency pairs, that it may affect the other major that is traded against, and it may dominate the other. It doesn't necessarily mean that, because we may have some additional data out on the other currency that you trade in. And let's just take an example. Let's say pound Swiss franc. If we get stronger Swiss, you're expecting pound Swiss thing to go ahead and sell off. But the question always lies on, what is the other currency doing? What news has come out? What's supporting that currency? And if we are seeing a weaker pound, then we'll see a big move to the downside, giving us a good opportunity to focus in on that pair. And so this is where I look at the currency strength indicator down here on the right-hand side, because this is going to give me sort of an idea of which currency pair to focus on if I want to do some scalping. All right? And this is what we're going to be doing in the trading room starting next week. We did a little bit this week. We picked up a few pips this week, but we're going to be focusing in on this. There were two currency pairs this week that were really hot for us. EuroCAD was great for us on Wednesday, and then the pound Canadian was hot for us on Thursday. And the reason why those two pairs did so well this week in some scalping moves during the US trading session was because of the fact that price, all right, or at least not price, but the currencies that we're looking at, one was a very strong currency and the other one was a very weak currency. And having that combination gives you the highest probability with technical analysis in able to be able to pick up some good trading opportunity. Let's take a look and see this morning, Friday morning, which is not a day that you want to go ahead and put in new trades, because you really want to go ahead and start playing some golf, right? Go fishing, go play golf, go do whatever you want to do other than trading. Friday's not the perfect day to go ahead and trade. In fact, every Friday when I was back in South Africa, Friday is what we called a day off, right? Now you can trade during the European session, but just don't get into trades during the US trading session. Not on a Friday, all right? So if we go to this chart right here and we take a look at the chart, what do we see as a strong currency pair for right now and a weak currency pair? Well, we see that the Swiss is becoming a strong currency pair. The US dollar is a weak. So we've got strong and weak. Let's go ahead and take over the last 4 hours. Let's see what's Swiss franc still strongest currency pair. Hold on, has that changed to the euro? Oh, the euro is still strong. So we got strong Swiss. We got strong US dollar. So right now, Swiss US dollar should be seeing a bearish sell-off. Let's go take a look. There it is. All right. Seen a nice little bearish move to the downside. We can see if I go ahead and flip this over to a daily move right here. We can also see right here, Swiss in the last 24 hours has been strong Swiss, and US dollar actually, in fact, hasn't been that strong. Now look at the Swiss pound. That's also a good combination, right? Pound, that means we should be seeing a sell-off on pound Swiss. Let's go take a look at pound Swiss right here. And we are. All right, we've seen a sell-off. Now, these are the type of things that we can go ahead and focus on. So what we're going to do is we break it down into a smaller time frame, and we look on a smaller time frame, like the 1 minute time frame, and we look to scalp opportunities going south on the 1 minute time frame, right? Something like we did here, right? You pick up some scalp opportunities to be able to trade this going south. So once we identify which one is weak and which one is strong, it really sets us up with a good position to start breaking it down on technical analysis and figure out whether or not it's a trading opportunity for us to go ahead and trade. So we've got a lot of things that we can go ahead and use. We can use patterns, we can use moon phases, we can use Ichimoku cloud, we can use the dashboard, we can use divergence. There's a bunch of things that we can use to be able to find the trading opportunity that matches up with technical analysis and of course which currency pair is the most favorable currency pair to go ahead and scalp that morning. Now, traders, doesn't mean because a currency pair has a weak and a strong and the market's moving that you can go ahead and just trade it at any time, because you got to realize this: the market, all right, the market moves in these seasons, or these, in this case now, sessions, because we're trading intraday. So in sessions, what happens is, in the European session, the market may be bearish on that particular currency pair because you've got a weak and a strong pair. But then in the US trading session, we may have a correction move. So you've got to pay attention to how the market's moved in the European session in order to be able to establish whether it's a good time to start trading it now. Now, you can use a 1 hour currency strength indicator or index in order to be able to identify whether in the last hour or within this last hour, do we still have some bearishness? But then you always have to support that with technical analysis. Now, how are you going to know all this stuff? Well, if you join the trading room, you'll be able to get all this information in. We're going to be starting off next week, so make sure you jump in next week. In the description is the links to be able to get into the trading room if you're interested. All right, traders, with that being said, we haven't got much left to talk about for this week's trading. We definitely will jump into new trading opportunities on Monday next week. And we're still staying with the same schedule, around about 9 to 9:30 where we start these morning coffee sessions. But we are definitely going to shift this around and make some changes. I'll let you know as soon as that happens over the next couple of weeks. All right, so with that being said, traders, you guys have an awesome, awesome day and a fantastic weekend. And I'll see you back on Monday. This is FX Big Dog, signing off.